Dhirendra Kumar, the CEO of Value Research and our in-house mutual fund expert who joins us on this show every week. Dhirendra, thank you so much for joining us on Investors Guide. Let's get straight to our portfolio versus portfolio question. Well, Ashish Kishore has written in, he's 38 years old and works in the armed forces. Now, he writes in saying he wants to build a corpus of 1.5 crore rupees in the next 10 to 15 years. Now, he tells us he already has life insurance, a cover of 40 lakh rupees for which he pays 4,000 rupees every month. And since he is in the forces, he doesn't have to worry about health insurance for him or his family. Now, onto his investments. He invests 30,000 rupees every month in the Provident Fund and has accumulated a corpus of 25 lakh rupees so far. He also puts 7,000 rupees per month in mutual funds through SIPs and wants to know if he's made the right choice in terms of the funds that he's invested in. Now, he tells us he can increase that investment to 40,000 rupees a month, and he wants to know what his ideal asset allocation should be, especially for the long term, considering he's investing for the next 10 to 15 years. So, Dhirendra, I want to first start by talking about his life insurance. He has a cover of 40 lakh rupees. First of all, we need to find out if that's enough, or is he covered by the government as well, and will that be sufficient? And if he's one of those armed personnel who possibly might retire early, then will there be a question of him getting independent insurance on his own? Do you think he should take all of that into consideration at this point? He tells us he's 38 years old.
Yeah, that's very important because, armed force people in service and who have the field assignment still outstanding, they are not covered by the normal, insurance coverage. So for that, I don't think he will have a choice. But I think it will be worthwhile to, anticipate that when he's likely to retire and take some presumptive, prepare for it. That apart, I think, with 10 to 15 years still on his side, I think he's very low on equity. 30,000 going into Provident Fund, which will yield 8%, even though, it is the interest income will still be exempt, but finally it will be earning only 8%. And with time on your side, I think, you should be higher, you should have higher discretionary investment going into equity. Looking at his portfolio, I think, he'll be better off matching with our aggressive portfolio given his time frame.
Alright, so match with our aggressive portfolio. Ashish, that's flashing on your screen right now. So like Dhirendra said, you seem to be on track with your investments. You might need to increase your investments going forward to equity. So if he has 40,000 rupees to invest every month, would you recommend that all of that money now goes into equity, Dhirendra?
He should ignore the fixed income allocation, the 10% fixed income allocation in the portfolio. And he should actually be looking at, the minimum investment that should go into his Provident Fund, and rest of it, of the 40,000, only the statutory part should go into the Provident Fund, and remaining should just get mapped to our aggressive portfolio without the fixed income allocation.
All right, Ashish, our aggressive portfolio without the fixed income allocation. Write back to us if you need any more help with your investments. Let's move on now to our hold or sell segment. Dhirendra Kumar has written in, he's 42 years old and he works as an engineer. He's invested 1 lakh rupees in mutual funds since 2008. Now, some of those funds, he says, are not performing very well. He also now wants to put in an additional 2 lakh rupees, and he wants us to help him align his portfolio to give him better returns. Now, the first fund in his portfolio, Dhirendra, is the SBI Infrastructure Fund. Now, this is a thematic fund. He has 3 thematic funds in his portfolio. Infrastructure has had a rough couple of years. Is this something he should hang on to as an investment?
No, I think, he should lose patience with this fund, and so with many other infrastructure funds. So this is an immediate sell, and just get over it. It was, most investors caught this peak, and you should just move on after selling this.
Get out of that one. The Reliance Natural Resources Fund is the next on his list, another thematic fund. Dhirendra, continue investing in this one?
No, here again, I think he will be better off without being here. And also, this fund unfortunately also was, launched at the peak and investors bought at the peak. So it's likely to be a lingering disappointment. I don't know when we will see a turnaround for this kind of theme. It has a broad theme. It can also invest abroad, but I don't think any of that is working for this. It's likely to work in near future. So this is also a sell. One
more thematic fund, Reliance Diversified Power Sector Fund. Again, this is another sector that's been struggling for the last year. But in terms of this investment, would you recommend he hold on to it, or is it time to get out of this one as well?
No, I think, the fund has run its course. The best times are behind it. And also, the Diversified Power Sector Fund, it was the best performing fund over a long period of time, and investors, and the diversified in the whole naming of this fund to some extent misled some investors, and investors thought that it is a very generic thing. It is not, and I think there are difficult times ahead for the underlying businesses where this fund invests. So this is also a clear sell now.
Well, a couple of mid-cap funds coming up. The Sundaram Select Mid-Cap Fund is the next on his list. Not the best mid-cap fund in the pack right now, but should he continue investing in this one?
Yeah, not the best mid-cap, but it's not an awkward mid-cap either. At best one can say that it's an average or a little above average fund. It's not as good as some other funds in this category, but it's not a very disappointing fund. And I think the best time for mid caps is might be ahead of us. Might be the outlook is bright if we are looking at some even a niche turnaround for the market. So this is worth holding.
HDFC Mid-Cap Opportunities is the next on his list. 20,000 rupees invested in this fund. Continue investing, Dhirendra?
Yeah, I think this is the most promising fund which has emerged in the past 3 years in this category, and he must hold this, and I think turnaround in the market, this fund will come shining.
The Franklin India Blue Chip Fund is the next on his list. 15,000 rupees invested in this fund. In the dividend option, that might not be the best idea, but should he continue investing in the fund?
Yes, this will provide him the most, the biggest stability in his portfolio, and it's a large cap fund. It remains a very attractive and a well-performing large cap fund. So he should continue investing, and he should hold this position to anchor his portfolio to greater stability. Given that he has 2 other mid-cap funds, this is an essential thing.
Right, and the last fund on his list is the DSP Merrill Lynch Opportunities Fund. This is in the dividend option as well. Should he continue investing in this fund?
Yes, this is also above average fund, and if we see a turnaround in the market, then I think this fund and the other 2 mid-caps will show remarkable turnaround. So I think this is these 4 funds, the generic equity fund, they are worth holding. Rest of them they should be sold, and he should consider moving his money if he may not. Unlikely that many investors will be in profit with their investment. So it will be worthwhile to switch his investment from the dividend plan to the growth plan.
All right, Sampath, so that's the advice you're getting right now. You need to get out of the 3 thematic funds, stay with the 4 equity diversified funds you have, and move all incremental investment into these funds. Remember, switch out of that dividend option into the growth option. That would be the most tax efficient option going forward. Let's move on. We have one more question. Bilash Biswas has written in. He tells us he has a son who's 4 years old, and he's been investing 2,000 rupees every month for his son and his education. Now he's chosen to invest in 2 funds, the HDFC Top 200 and the Birla Sun Life Infrastructure Fund. He wants to know if his investment will grow into 10 lakh rupees over the next 10 years. Dhirendra, I have a question about that infrastructure fund. For someone who's investing for his child on a regular basis, is infrastructure really the way to go?
It's a completely avoidable strategy, and for most investors trying to look for investment where they would ideally not like to intervene, they would not like to change the selection, then the endeavor should be to find a vehicle which is flexible, which has a proven track record, and it is not constrained by anything, and any thematic fund, any sector fund will be constrained on that front. That apart, I think any market related investment, you can't invest and sleep over it for 10 years because it's not a FD, because it's not any market related investment is not a 15% yielding product. So I would say that the reason why you buy a fund, you will have to validate that the reason why you bought that fund, or the variables for which you bought that fund, they are still in place, and at least review it every year.
Right, so he does have 2,000 rupees to put aside every month. Dhirendra, are there a couple of names you can suggest to him that he can start investing in now for his son?
I would say he should look at our mainstream, our growth portfolio, and from that picking any of the 4 funds or any 2 of the 4 funds, that should be good enough.
Our growth portfolio is on your screen right now. Remember, Dhirendra said you could pick 1 or 2 of these funds and invest in them, and you'd be okay for that plan that you need to make for your son.